According to the chart, the European currency is still trading within a sideways range. Yesterday, bulls made another attempt to break above the 1.1300 level, but failed. Thus, the situation remained unchanged. The levels of 1.1262 and 1.1303 act as support and resistance respectively. The middle of the channel is 1.1285, so I recommend focusing on these marks today. As for fundamental factors, yesterday's macroeconomic calendar was bereft of any important releases. Today, I think it's worth drawing attention to GDP data from Britain and the United States. UK gross domestic product for the third quarter is forecast to be in line with a preliminary estimate. Likewise, the growth rate of the US economy is expected to remain at the preliminary estimate. In addition, the US is set to report data on consumer confidence. Economists forecast the consumer confidence index nudging up to 110.5. From a technical point of view, a false breakout at 1.1262, the lower boundary of the range, will create a buy signal. In this case, bulls will strive to regain control over 1.1285 and then overcome the round level of 1.1300. If the price tests the levels of 1.1285 and 1.1303 from the top down, the volume of long position will increase. Thus, the euro will have a chance of recovering to the resistance level of 1.1332 and 1.1359. In the event of bulls' subdued activity at 1.1262 or a false breakout at 1.1285, a breakout followed by a reverse test will increase pressure on the euro. In this situation, the European currency will most likely dip to the intermediate support of 1.1246 and then 1.1224 as the key target level. From the 1.1224 mark, it will be possible to open long position on a rebound with a view to catching an intraday correction of 15-20 pips. Long position from the level of 1.1246 can be considered only in case of a false breakout. Speaking of the British pound yesterday, buyers managed to push the price up. As a result, the price hit a new high, rising above the highest level posted on December 20. Thus, the pound sterling continues to move as part of an upward correction. In the Asian session, the price also advanced above yesterday's high. This means that the pair has already recouped half of its losses incurred on Friday and early trade on Monday. Now the principal task of bulls will be to protect the support level of 1.3232. A false breakout at this level will enable the British pound to head for 1.3271. If the price consolidates about this mark, the way to the levels of 1.3301 and 1.3336 will open. From the level of 1.3336, traders will be able to open short position on a rebound, counting on an intraday correction of 15-20 pips. If bulls trading activity at 1.3232 turns out to be thin, bears are able to protect 1.3271 in the early session, a sell signal will appear. In this case, the pound sterling will most likely return to the lower boundary of the wide sideways channel, 1.3173, 1.3163. In this area, I recommend going long on a rebound. Long position from 1.3200 can be considered only in the event of a false breakout. Well, that's it. If you have any questions, please post them in the comments below. Good luck.